Hello and welcome. In this video, we will learn about a three candlestick pattern called as morning star. Okay. Now this morning star is a bullish reversal pattern and we need to look at three candlesticks to decide if it is a morning star or not. Alright. Now here are the characteristics. Let me explain them one by one. First, this pattern has to occur at the bottom of a downtrend. So we need a downtrend first, and at the end of the downtrend, this pattern should form. Okay. Now in this pattern, the first candle must be a big red candle, meaning the sellers or the bears must be in control of the price. So here it is a red candle and a big candle, meaning the bears or sellers are in control of the price here. Correct? Yes. Next, the second candle need to open gap down, meaning there must be a gap between the close of this candle and opening of this candle. Alright? And there must be a gap between the close of this candle and also the close of this candle. This candle can be either red or green, it doesn't matter. In this case, it is green. It can be red too, okay? And this candle must be a narrow range candle or it must be a small candle, okay? This is a small candle, right? Yes. Next, the third candle must open gap up from the second, meaning there must be a gap between the closing price of this second candle and the opening price of the third candle. And the third candle must be a good green candle, okay? It must be a big green candle, meaning the buyers or the bulls must be in control of the price. And this green candle must close above the midpoint of the body of the red candle. So the midpoint of this red candle is here and this must close above it, which it has now. Okay. So if the pattern satisfies all these conditions, then it will be recognized as a morning star. Okay. Yes. Now the thing is, this is a perfect morning star. Perfect morning star. But in the real market, we rarely find a pattern like this, meaning a perfect morning star. And so we have to go for the variations of morning star. Okay. So this is a perfect morning star and this rarely appears in real market, and so we can adjust with this variation of morning star. So here we have a big red candle which is good. Here we have a red candle which is good, but then the second red candle has opened at the same level of the closing of the first candle, which is not what we wanted. We wanted a gap between the opening of the second candle and the close of the first candle, which did not happen here. The third candle is a big green candle and it has closed above the midpoint of the red candle, but it has not opened with a gap. If you see here, the opening of the green candle is well below the close of the red candle. So this does not satisfy all the conditions of a morning star, but we accept this as morning star because it appears frequently. Okay, so this is a variation of morning star. Next, this is also a variation of morning star. We have a red candle and a green candle and a doji. Okay, this is called as a doji, which we will learn in future videos. Here the buyers and sellers both are of same strength and there is an indecision. Okay, and so there is no body here. Alright, so this is also an accepted morning star. And next we have this, a red candle and a green candle and a green candle. Okay, so this can be green or red. Alright, this can be green or red, this can also be green or red. Okay, now here the third candle has opened with a gap down, but it has closed above the midpoint of the first red candle. The main thing that we want is that the green candle must close above the midpoint of the body of the first red candle. Alright, so that is what we want. Alright, now these are not considered as morning stars. So here we have a red candle, we have a green candle, we have a green candle. There is a gap here, there is a gap here. So everything is perfect here. But then the third candle, which is this green candle, has not closed above the midpoint of the body of the red candle. Okay, so we do not consider this as a morning star. The wick has gone above the midpoint, but then as I said, the wicks do not matter here. We want the body to close above the midpoint. Okay, so this is not a valid morning star. Here we have everything proper. Okay, of course there is no gap here, but here if you see, we have a long wick, here we have a long wick, here we have a long wick. This shows buying pressure, this shows sell here, or I can say, so this, the price went up till here, but then sellers brought it down. Okay, sellers brought it down. Here the buyers took it up, the sellers brought it down. The sellers brought it till here, then the buyers took it up. So the candle is not strong. Entirely the sellers were not in control. Entirely the buyers were not in control here. This candle has closed well above the midpoint of the red candle, but there are a lot of wicks, lengthy wicks, and so this is not a morning star. Alright? Yes. Now, let us take two charts and see how to trade with morning star. Okay? Now, this is a 30-minute chart. Price was coming down. It was coming down. And at the end, we see a morning star pattern. We have a red candle, a good red candle. We have our green small candle, and we have our green big candle. Of course, there are wicks here, but this is a variation of our morning star. Okay, this is acceptable because if you wait for the perfect morning star, it may not appear at all, and you might lose some trades. Okay, now this becomes powerful because it has appeared at a support level. Okay, it has appeared at a support level. So this is fine. Now you can take your entry at the closing of this green candle, or you can wait for a price confirmation, which is you have to wait for a green candle to close above the close of this. Okay, so you can wait for the green candle or you can enter here. The stop loss would be below this because if you compare this and if you compare this, this is at lower level, and so our stop loss would be here and our target would be here. Okay, or here, and if we had taken the trade, then it would have gone in our favor. Okay. So basically what happens is price will be coming down, and then there will be an indecision, meaning buyers and sellers are in a confusion whether to take the price down or up. Okay. They are waiting for some motive to take the price in either upward or downward direction. And then what happens is the next day or next 30 minutes here in this case, the buyers come with full strength and then take the price up and close it way beyond the midpoint of the red candle. The indecision that was here is removed when the buyers come in, and now we can assume that the price will go up. Okay. Yes. Next, this is a day candle. Price is coming down and we have almost perfect morning star. Here we have very long wicks, that is a disadvantage here. Apart from that, this is a perfect morning star. Okay. You can place your stop loss here below. Now, since the wicks are very long, the stop loss would also be more. You can place the stop loss below this and place the target over here and enter the trade. You can enter the trade at the closing of this, or you can wait for a green candle to close above the closing of this candle and then enter the trade. Okay. And once again, you have to see if there is any support prior this. Alright. Yes. So this is how you trade morning star pattern, which is one of the most powerful bullish reversal pattern. Okay.